Welcome to Money Making Sense, the show that talks about all things money. Today we are still in our tax tip series. This is number 3, and we're actually doing itemized deductions. And joining me is Ashley Christenson. How are you doing?
I'm great. How are you?
Good. And you're with Tanner.
I am. Yep.
Okay. So today we're talking itemized deductions, and I think this is a big one on everybody's bucket list.
Definitely.
Sort of. For a lot of reasons. One, the more deductions we can take, itemizing it all, generally either the lower your payment will be or the more refund you get.
Exactly.
But there's a big change this year.
Yes, there's lots of big changes.
Tell us how the new for filing for 2018, what's our minimum itemized deduction we can take?
So yeah, the IRS, it depends on the standard deduction that the IRS gives you.
Yeah.
If you are over the standard deduction in the amount of itemized deductions that you can take, then you'll be better off itemizing. So the standard deduction for 2018 actually increased, it almost doubled, which is pretty big because in years past, the standardized deduction has been increased maybe $50 or $100 every year, and this year almost doubled. And so it's a huge change. So if you're a single taxpayer, the standard deduction went from in the $6,000 range to $12,000. If you're a married taxpayer, it went from the $12,000 range to the $24,000.
Yeah.
And so a lot more taxpayers will be using the standard deduction this year rather than itemizing, and that was in an attempt to kind of simplify the taxes.
So in
this
my
year.
case, as an example, the standard last year, the standard was $6,000.
Yeah, in the 6,000 range.
Right. And I was able to itemize a bunch of stuff, and all my deductions total came to $8,000.
Okay. Yep.
So I was $2,000 over the standard the IRS allowed.
Yes.
And I got a pretty sizable refund. But this year, if I still only have $8,000 if I itemize everything, the standard is $12,000.
Right.
Does that mean I'm going to get an even bigger refund?
It depends on your situation. There's lots of things that change with the new tax law with income and deductions, and so that's where it's good to have your CPA analyze your situation and your amounts this year. But if nothing changed and you still have $8,000 of itemized deductions, it would be more beneficial for you to take the $12,000 standard deduction. And if nothing changed, then yeah, you might get a bigger refund this year because of that.
I'm happy about that.
Yeah, always good news.
But I work from home a lot.
Okay.
So that was one of the big things I could take was my itemized deductions. How is that going to change? Like, aren't there certain deductions that they said, oh, sorry, you're not allowed to itemize that anymore?
Yes, definitely. So one of the big ones it's called a 2% miscellaneous itemized deduction. And the IRS said, okay, there's certain deductions where if you're over 2% of your adjusted gross income, you can take this as an itemized deductions. And those costs include job seeking costs, it includes unreimbursed business expenses. And so any of those expenses, they just said, we're doing away with that this year.
But I'm sorry, do you know how much I do? So, like, I have to buy my own headphones. Those are like, $150 a pop.
Yes.
I can't deduct that anymore?
You cannot deduct that as an unreimbursed business expense anymore. But a lot of employers are looking at what's called an accountable plan, and so they're looking at kind of making up for this missed deduction and letting you be reimbursed for those instead. And so that may be something that you talk to your employer about.
Okay. Is there anything else besides this work-related expenses that are going away?
Like I said, the 2% miscellaneous deduction, so the big ones under there are job seeking costs, unreimbursed business expenses, tax preparation fees, and then a couple other small ones that not a lot of people take. So that is going away. And then there also are a few other limitations that are being applied to itemized deductions. So if you want me to go into that,
Yeah.
I can.
Okay. What are our limitations?
Yeah,
We
so
need to know that.
one of the biggest ones is in the past you've received a deduction for state and local taxes, and that includes real estate taxes, state taxes that are withheld from your W-2, and then state taxes that you pay when you file your state tax returns. So in the past, you've been able to take an unlimited itemized deduction generally for that. Now it's limited to $10,000. The government has just said, hey, flat, we're just limiting this to $10,000. You can't take anywhere over $10,000 for those items.
So if I paid, let's say, $9,500 in real estate taxes,
Sure.
and then my state taxes that I paid were $1,000. That brings me to $10,500.
Yes.
I can only get reimbursed or put on my 1040 the $10,000. That $500, it's just gone.
That's right. Yep, unfortunately. But there are some good things also that the government did along with this. So as far as medical deductions, you've received a medical an itemized deduction for medical expenses in excess of 10% of your income in prior years. This year they lowered it down to 7.5%, and so anything over 7.5% in medical expenses you can deduct as an itemized deduction.
So if I make $100,000 a year and I have more than $10,000 in medical expenses, I can deduct anything above that $10,000
in prior years. This year it's 7.5%, and so it's actually a little bit more favorable for taxpayers that have that medical expense.
So if I only had $7,500 in medical expenses based on $100,000 income, I could deduct anything above that.
In excess of that. That's right.
Okay.
Yep. Yeah. So that's a little bit better. Also, something that's better this year is the charitable contribution limitation. And so in the past, any cash contributions, you've been able to deduct up to 50% of your income. And this year, they increased the limit to 60%. And so that is a little bit more favorable for taxpayers as well.
Okay. I think you have to be very rich to do like 60% of your income.
That is true.
That charitable.
Is true. Right. Some of these things may affect some taxpayers more than others. Like I said, you'll have to have a CPA analyze your income and see which new laws affect you.
So not. This is, this year, if nobody's ever been to a CPA before, this year is the year to do it, just to work through all these first-time jitters, if nothing else.
I would say yes. And in addition to that, I know we say this every year, but this year more than ever, I think it's more important to start your taxes as early as possible and to give your CPAs additional time to be able to look at your expenses, look at your income, analyze your situation, and see how these new tax laws apply to your situation.
Ashley Christenson with Tanner.
That's right.
Thank you so much for kind of guiding us a little bit through these itemized deductions, and it's a big change this year. So please go to uacpa.org to find an account who's right for you, and stay tuned to KSL News Radio because we're going to bring you tips through the next weeks as well. And again, that's uacpa.org. That's Utah Association of Certified Public Accountants.
Thanks for being a Money Making Sense listener. Follow your common sense on the social media. Money Making Sense on Facebook, Twitter, and Instagram.